Hi, this is Sonia Morgan, broker owner of SJ Morgan Private Lending Exchange and broker associate with Remax Executive. And I just wanted to go over real quick today. I wanted to do a post or a video post that would be helpful for other lenders, other realtors, the clients. And so one of the things that we do at SJ Morgan are private investment loans. So we do all loans. We do FHA, VA, and I think you've heard us say that before, but we are a specialized lender. So we specialize in hard to place loans or difficult loans, and one of those loans that we specialize in are private money loans. People call them hard money loans, some different things. So what I wanted to do was I wanted to kind of start doing some videos on scenarios of private money loans that we've done. So one of the more recent ones that loans that we've done was a property that was in Los Banos, California. And the borrower had actually rented and lived in the property for 19 years. And they had, at one point in time, the seller had told the borrower, "You've lived here a long time, you've taken really good care of the property, I'll sell this property to you for X amount of dollars." And the borrower at that time did not take advantage of purchasing at that amount. They just kind of went on renting the property. And then they came to a point where they said, "Hey, you know what? We're ready to buy this property. Would you still sell it to me for $200,000? Because that was the verbal agreement that you had given us." And the seller said, "Sure, I'll sell it to you for $200,000. Well, the property was actually worth over $300,000. So there was what was called a built-in equity. So even though the borrower was purchasing it for $200,000, the property is actually worth $300,000. And so this is a situation that's common for private money when there's built-in equity or a gift of equity or something. Usually it's in a family member, but this situation, it was just an agreement that had been made. And so this particular borrower had a very high credit score, but he also was self-employed. And so he had a job that he worked for a company, and then he also did a similar type of work on the side as his own company, and it did not reflect well on his taxes. So this borrower had the opportunity to buy a property with $100,000 in equity, but could not get a loan. And so that's a situation that it makes sense. It makes sense that this person should be able to buy this house, but they were unable to. And so we were able to secure an investor who would loan the borrower the complete purchase price of the property. We received an appraisal, and we analyzed the bank statements for the client to show that indeed they were bringing in more money than they were just from their paycheck each month. And so we were able to provide a loan so the borrower could buy the property with gift equity. That's just one example of what a private money loan would be. Please continue to watch the series as we share different reasons why people use private money, and hope this was educational for you. And remember, who you work with matters.